Investing in the stock market carries risk, and it is crucial to understand the potential pitfalls before engaging in any investment activities. The content presented here serves as a disclaimer to ensure that viewers are aware of the inherent risk involved. The information provided in this video is for educational purpose only and should not be considered as a financial or legal advice. Hi readers, welcome back to my channel. Today we will be discussing about a continuation gap up, one of the gap up type strategy. What is gap up? Gap up is generally happens between a two consecutive candle closing price and opening price. If there is a gap between the closing price and the opening price of a candle, then we call it as a gap. Generally, such gaps are occur due to a fundamental or a technical reasons based on yesterday close price and today opening price. Due to certain reasons like positive news announcement, any strong earning reports or any favorable conditions or significant buying interest shown by the investors. Gap up is nothing but a price opening higher than yesterday closing. Gap down is nothing but a price opening lower than yesterday closing. It is worth noting that not all gaps are significant or carries the same implication. The size, volume and the context of the gap which matters, along with the overall condition and the factors that trader need to interpret out of this gap. Generally, such gap would be considered as an investment for the traders, and they take long position considering the trend would continue to resume. There are different types of gap up in the market, like breakaway gap up, runaway gap up, exhaustion gap up, common gap up, continuation gap up. Like I said, today we will be discussing about the continuation gap up. A continuation gap up is nothing but to an existing upward trend, there is going to be a gap up happening between yesterday closing price and today opening price. Let's say yesterday the price has closed at 100, today the price is opened at 103, and the trend is already on the upside. Then we consider it as a continuation gap up. And to confirm whether it is a continuation gap up, we need to see and check the volume. There should be a substantial volume of buying that should happen on today. After such gaps signifies we are in a continuation gap up. With some couple of samples, we will be explaining about this continuation gap up, how one can pick the continuation gap up, how they can take entry, where the stop loss needs to be kept, how they can trail the stop loss, how the target can be achieved, when to exit, and the risk management will be discussed in the upcoming slides. Like I said, we are moving with the trend. So trend is your friend. This is a key advantage of the strategy. We are moving with the trend. And second, since this is a continuation gap up and we are taking volume additional help, the higher risk reward ratio can be achieved, which can varies from 1:2 to 1:10. We can achieve such a high risk reward ratio with the strategy. And then the stop loss of this strategy would be very much meager in terms of return that we are going to achieve out of it. Let's say if there is a gap up, the stop loss where we are going to keep is just 0.5% from the low of the our entry day. So the 0.5% below the gap up would be hardly 1 or 2% from our entry level is going to be the stop loss. So it has a higher risk reward ratio considering the fact that we are moving with the trend. The chart settings that we will be using is on the daily time frame, and the exponential moving average 25 period will be used along with the volume chart to take the confirmation whether we are getting the substantial volume, and will be enabling moving average onto the volume chart, and the super trend would be used to trail our target or the exit point. And please note that at any point of time, do not allocate more than 20% of the capital on any trade, and do not risk more than 3% on any particular trade. Now you can open Zerodha or TradingView. I'm using TradingView for simplification. I'm choosing a stock IDFC First Bank because I know that this has given a breakout. Changing the time frame to daily time frame, choosing the moving average. So this is not a simple moving average, it is an exponential moving average. Change the settings of exponential moving average length period from 9 default value to 25. That is our one of the criteria. And the second criteria would be to add the volume. we will be adding the volume, and adding volume, we will be adding a moving average to the volume itself. There is a tab called style. Under the style you have moving average volume. Just to have a better clarity onto that, I'm increasing the density of the length, so you can see that the line is much visible. And then finally I'm adding the super trend. The super trend, I'll be changing the default value of 10.3 to 10.2. So the setup is ready. Now you can see this is how the setup it is, and the breakout has happened sometimes in May. You can see that this is a continuation gap where we are with the trend of an up move, so that the overall trend is on the upside. We will be taking an entry onto this after the breakout day closure. You can see a significant amount of volume has come, and after the breakout, if you see, the stop loss is very much meager, and it has never even reached that stop loss level, and it gave a target of up to 85, that is more than 20% target, keeping 1:10 risk reward. That's the power of going with the trend. And this is for NLC India. You can see it is very much going into the uptrend. We are taking an entry near 89 or 90. You see a gap up, continuation gap up along with the volume significant, and it has given a target of 1:7. And then Jindal Steels, we are in an uptrend. In an uptrend, it has given a gap up. Gap up has the volume to it, signifies a buy. Then we are taking an entry, keeping a 1:2 minimum risk reward. Then comes Mahendra. We are in an uptrend. Then there is a gap with a high volume. Take an entry onto the next day. Keep a low as a stop loss of 0.5% and below. This is for PNB Housing Finance. It is in an uptrend. Also a cup and handle breakout. With the breakout, it has given an entry near the 515, and the target it has gone until 622. This is how one should be using this strategy, identifying the gaps and benefit out of it. The charting URL is also attached to this video description. Kindly have a look into it. Thank you for watching this video. Please like and subscribe my channel. Follow us for more such educational content. Thank you.